overall, based on the monthly targets that we set. And as you can see, we're fairly on target. We do have those truck fees having some slight influence on DMV. Again, sales tax is at that 25% because only one payment had come in. And so we're in very good shape for the year. What are we looking at moving forward? I'll start with fuel taxes in the chart. As you can see, fuel taxes are doing fairly well. They have dropped from the high of June of 2022, but the green is this confidence interval with where prices are heading, and that is due to the uncertainty with oil barges navigating through the Red Sea. What the forecast is showing is very positive. The U.S. has boosted our internal refinery capacity to all-time levels. As you can see, we are expecting 13.4 million barrels a day in 2025. Again, that is a record high for the U.S. And gasoline prices are expected to tick down very mildly as time goes on. Now, of course, we are seeing some fluctuation, especially in the last month due to the Red Sea, and we continue to follow that. Vehicle update. Again, I will start with the chart. First, the lower chart shows actually North Carolina purchases of new and used vehicles. And what we're seeing is the new car market continuing to increase, generally month after month, with little resolve, whereas we are seeing some steadying of the used car market. The large chart shows about a 2-year analysis of where prices stand. So green is the big change, and that is electric vehicle prices. So some of this is the end of the supply chain problems, which of course is starting to accelerate with the Red Sea, and that is going to affect new car prices. What we are seeing, what we expect is new car prices in 24 will begin to stabilize and fall. We don't know how much this is going to play into reality, because we do know cars from overseas will incur those additional shipping costs. In terms of EVs, we did, of course, hit that 80,000 in November of this year, which is the governor's EO80 target for the number of EVs by January 1 of 2025. So we hit that 13 months early. In terms of projections, we do anticipate hitting about 100,000 combined EVs and plug-in electric vehicles by the end of this fiscal year. For sales tax, now, as I said, what has been the saving grace of the economy is consumer spending. That is going to change, but there are also some good signs here, largely that interest rates are coming down. We do expect the Fed to issue at least a quarter cent, if not in the March meeting. It will not be in today's meeting. If not in March, then in the May meeting. We do expect inflation to continue to moderate. And some of that is, of course, offset by the ability of consumers to maintain their spending. As I said, personal savings has declined. The labor market is expected to cool. We did see really for the first month in December, slight increases around the country in unemployment. The housing inventory is opening up, but we do think household debt will continue to increase. The big news on the DMV front is we have estimates for the quadrennial reset. In 2020, this was the first year that quad reset went into effect, and that was 7.86%. It gets reset in July 1st, later this year, and it does apply to most DMV fees, and that rate will be 19.18%. And I give you some figures for the new rates. As you know, driver's licenses are issued in either 5-year or 8-year increments. That rate goes up to $650. Learner's permits goes up to $25.50. EVs will go up to $214.50, and the plug-in fee will go up. The new fee that started in January of this year will go up from $90 to $107.25. I'm happy to take any questions.
EV sales are going down from what I know, talking to dealers. Does this imply your numbers are going up? Is that historical?
Yes, we are using actual DMV data. We are not seeing that trend. In fact, you don't really see it in the national numbers. EVs hit 1 million sales for the first time in 2023. The numbers just came out for last year. Plugins added another 400,000. So there is not a slowdown that is happening nationally. It's that the percent growth perhaps is less than expected.
Well, I think with Hertz cutting their electric fleet by 1/3 is going to have some impact going forward. The other thing,
but it will go to the used car market.
Well, right, but from new cars and our growth, or shipped to somewhere else. What is this halt on gas shipments do? Exporting natural gas. What does that do to the economy, in your opinion?
The shipments of natural gas?
Yeah, no, I just wondered from the I know what it is. Does it have any bearing on the economy or revenues as you see it?
I would not be an expert on that.
Okay.
Any other questions, thoughts? Thank you very much. That concludes the items on our agenda. I did have one other thought and maybe a question for you, Mark. Going back to the cash, would it be fair to say that, as we look out 2 years, we don't have any bright line trigger, like we saw those actions that would be taken under different levels? Is it more of an ongoing conversation about looking at all these factors of days of cash on hand, and there's no bright line trigger?
When we have those metrics, they're all different points of information that will influence our decision in different ways. And you don't want to take one single metric and make it your trigger. So we're looking at a basket of those two primary ones, but we're also looking at our performance to budget, and then how our estimated revenue. When the legislature passes a budget for us for DOT, you've got, of course, the 2 years of the biennium, But then they also certify 5 years of estimates that helps establish our, what we often call internally the budget authority. So we're looking at where we are commitment wise, long-term against that as well, which is very important. So it's a set of metrics that are going to be influencing our decisions.
Excellent. Thanks for that clarification. I see that Mr. McGrady has joined us. Welcome, Chuck. Glad you're here. Did you have
Glad
anything?
you're here too. I wish I was with you. But my Achilles tendon decided I wasn't going to make it today. One thing that struck me is that we have these cash minimums and maximums that are set by the legislature. And that just doesn't seem to make sense given what our projections are here. I know that's a legislative matter, but the chart that we're now using makes a lot of sense though. That is cash as a percentage of commitments. And you and I have talked about it, Tony, in the past, and I guess we'll continue to talk about seeing if we can get a different set of statutory requirements that more accurately reflect where we are today. The budget is a lot bigger than it used to be, and it's going to probably be a lot bigger in future years. And therefore, having a fixed cash figure, minimums and maximums doesn't really make sense. Although the concept is right, that is that there ought to be some limits that where our target is. But what we're looking at as a cash as a percentage of commitments would seem to be a better way to determine, at what point we need to make course corrections going forward.
As opposed to a flat dollar amount.
That's exactly right.
And on a related point, that's also pertinent to bonds that we issue and cash thresholds that are relevant to that. So if we are at the limits of our capital program in terms of what we can do, projects that we can fund and commit to, so we need more cash. But we can't, maybe we're blocked from issuing bonds without special permission at this point. It's something to look at on a related point to what you're talking about. Joey?
Yeah, just a couple comments and appreciate that, Mr. McGrady. In our agency bill last year, we had asked to remove the reporting requirements when we exceed the cash limits that are in statute. We are entertaining the possibility of just asking to change that this year to Mr. McGrady's point, which I think was a great point. And we also asked last year to revise the language to where we could still sell or build bonds. And our cash balances exceeded that $1 billion threshold. We will ask for that again this year. So we can hopefully sell, our goal is to sell bonds this fall, if at all possible.
Because we did not sell bonds in 23, correct?
We did not, I don't, looking at that, and we had planned to sell bonds this spring, assuming that the language in our agency bill went through, which our agency bill didn't go through, so we had to postpone that opportunity for sale. But we're hopeful that we'll get it in the short session and we'll be able to sell bonds.
Right, because to refresh, the statute for build and C bonds authorizes 300 million a year.
300 million a year over the life. I think it
It's 10
started
years.
at 10 years, but it's been extended. And we had 1 year we could double up. And then if we have more than $1 billion of cash on hand, that 3-month average, then we can't sell bonds that year.
Great. All right. Well, we're going to finish ahead of time here unless there's anything else. Hearing nothing, I want to thank everybody for this very good discussion, Mark and Amna, for your very solid presentations and the great questions we got from our group. As always, very productive meeting. Thanks, and we're adjourned.